Hi, I'm Kevin Flanagan, head of fixed income strategy at Wisdom Tree.
And I'm Jeff Weniger, head of equity strategy. And this is Minds on the Markets, where we go behind the scenes and beyond the trends to explore the forces impacting our markets.
For everyone who was expecting a summer without headlines, unfortunately, that has not been the case the last couple of weeks. And certainly the latest news about President Biden dropping out of the race has created another layer of uncertainty for the markets, for investors. But it's interesting why we focus on who's going to become the next president. I would argue, Jeff, equally important is who's going to control both houses of Congress. And I think oftentimes that gets overlooked in the process. So we've been telling people what we should probably focus on is what we think we have more clarity for. And that's interesting because now we finally may have some clarity. And that's on Jay Powell and the Fed and what the Fed may be doing as summer comes to an end, or shall we say, maybe even autumn beginning. And what I wanted to do, since we're trying to get back, say, to the fundamentals, filter out some of the noise we're seeing from the political headlines, I wanted to talk to you a little bit, about the small cap space in the equity arena and what we've seen here post CPI. So give us a little thoughts here on what has been developing in that part of the stock market.
And you try to get into the market and figure out what is causing small caps to be outperforming or this sector to be working, because you have the whole Trump and Biden and Harris thing. That's first and foremost. Then you have that weak CPI, and you also have you're in the middle of earnings season too. So you don't know what percentage of each of these is moving everything. But yeah, ever since that very, very weak CPI report, which feels like it was 100 years ago, it has been a hyper focus, I guess you could say, on balance sheets. This notion that small caps tend to have more floating rate debt than large caps. And we've seen in the last really just a couple weeks here, Kevin, some of the most violent reactions to the upside in small caps, outperformance relative to large caps. And I think it's more Jay Powell than the Washington, D.C. calculus. And it's been basically because small caps have 30% of their debt in floating rate or variable rate structures, and large caps are only 8%. So it's kind of like risk on, risk off. It did a flipperooski as soon as Jay Powell became much more in the conversation.
I think, that's an interesting point when you're talking about it from a debt perspective. Looking at from a floating rate, obviously floating rate tends to be tied more to ultra short duration reference, whether it's SOFR in the old days, LIBOR, or in a Treasury floating rate note case, a 3-month weekly T-bill auction. And what's interesting when you're saying that is we're in an environment in Treasury land where we're starting to see some curve steepening, where the front end of the curve, say something that could be more closely tied, say to floating rate debt, seeing yields moving lower, but the back end of the curve trying to figure out what this is all going to mean. Are we going to see, inflationary fiscal policies as we go forward? So I think that's an important point, not trying to focus on, what do we do depending upon who's going to become president, but looking at it from that perspective, just from the debt structure of these companies, I think is important, as you mentioned, because Fed rate cuts, you would think, would help that scenario.
Yeah, and now we had been spending a few years talking about the net present value of distant cash flows back when Jay Powell was tightening by 525 basis points. And now there's this discussion out there about how the Mag 7 are just so cash rich, and maybe that cash will no longer be earning 5%. And meanwhile, you have down the spectrum, you have a lot of companies that are just not earning any money. Companies that really, really could use 25, 50, or 75 basis points worth of respite on their debt. And then, in the background, you also have these concepts of, if you just think about style boxes, where it's been mega cap growth dominating. And what's down there in mid and small cap value? It's oil, and it's the regionals. And I mean, if you just think about some of these trades that are starting to happen, that seems to be what is on. The MAGA platform is drill, baby, drill. And so that could theoretically be something that's helpful to oil, and Jay Powell's helping the regionals. But then you start to connect it in another way, Kevin. So if it takes a little bit of a leap, but if the idea is more oil production, maybe that solves some of the problems at the gas tank, and then that gives more fuel for Jay Powell to say, well, maybe unleaded gas is capped or is not going to go too much higher. Maybe I can cut even more aggressively, and then up we go on the Russell 2000. So it's really, really interesting action this summer. Don't ever go to the beach, my man.
I think, I would love to say I would take that advice, but I want to go to the beach. I want to go to the beach. It's summertime. I think we're going to end it there, Jeff. For everybody, please check us out on YouTube. Remember, every 2 weeks, it's Minds on the Markets with me, Kevin Flanagan, and my head of equity strategy colleague, Jeff Weniger. Have a good day, everybody.